What does this mean for Disney overall as a media company now moving into the gaming space?
So, look, this is something that has been speculated for several years, that ESPN might license off its name with a gambling partner. It was more prevalent when Bob Chapek was CEO. Bob Iger has been historically resistant to it. But the news is that, look, they've struck this deal with Penn Gaming. They'll be getting $150 million per year for at least the next 10 years, allowing Penn to use the ESPN Bet name, and there will also be some equity warrants attached to that, some sharing of ESPN talent, and potentially even ESPN programming that goes along with the app itself. Bigger picture, it means that ESPN is looking for a new revenue stream. It needs cash. It's the same reason that ESPN is thinking about bringing in a strategic partner, which is another story that I and others have been reporting on for the past several weeks. That stems back from Bob Iger, CEO Bob Iger's comments to David Faber on our air a few weeks ago, saying that he was interested in finding a new partner.
So, Alex, clearly a lot of storylines to follow here. I just want to get to the earnings numbers very quickly. Revenues are forecast to increase by 5%, profit to fall by 10%, but there is a lot to talk about beyond just the numbers in this report. So you listed off a few things. What's the other big storyline to watch in this earnings report, and especially the call where we're going to hear from Bob Iger?
Look, this is not a great time for Disney. I mean, you go segment by segment. Linear advertising, not great. Subscribers to linear TV, not good. Acceleration of cord cutting. You go to the movie studio. It's been kind of bomb after bomb for Disney. Elemental, Haunted Mansion, the Indiana Jones movie, the Little Mermaid. All of the recent movies have not done well. ESPN is clearly in some sort of strategic new phase here. So Disney needs to give investors a reason to once again get excited about the company. Because if you look at the current results for almost every one of their division, maybe parks aside, there's not a lot of reason for excitement. So recently, the CFO, Christine McCarthy's not there anymore. Perhaps Bob Iger does a lot of the talking on this call. It'll be interesting to see what reason he gives investors to stay with Disney, to be like, look, maybe we're in a lull here, but we're going to be on our way back soon.
Yeah, I want to add one more. Secret Invasion, certainly no Mandalorian. So they have some issues on the TV side as well. I also want to ask you about something that might generate some excitement, but not really in a good way. The news that Disney has an AI task force. Now, I imagine most companies have some type of AI task force, but the timing of this news seems less than ideal, I'll say, for Disney, especially with the writers and actors on strike over some of these issues.
Well, look, it is a big deal for Disney. AI is a bigger deal for Disney than many of its other peers out there because of the Marvel, it's owning Marvel IP and Star Wars IP. And it's very easy to replicate those characters in the background in ways that maybe other media companies don't have to worry about. So they want to put something together right now so that they can move forward in this writer's strike to come up with an agreement that benefits both the writers and the actors, but also Disney. So that's sort of the importance of it. And look, Disney needs to become a modern media company. And again, of course, you mentioned it, their streaming losses are still weighing that company down. And we don't know exactly when streaming will become profitable. So you can tick that one off also as this sort of being a lull for Disney. Even if streaming is the future, they need to make that a more profitable unit. So that's yet another issue for the company.